Alright, what's up YouTube? Thought I'd do a small video on MGM. I don't know too much about the stock, but what it's showing me from the chart is that, I think it's up almost over 40%. They reported it just on the news just a minute ago, and from what I'm seeing from the level of sellers, they're off the chart. If you wanted to invest in this company, remember you have to read on it. If you see a discount in the stock, go ahead and buy it. Also, you have to look at what analysts are rating the stock, if they're rating it a buy, a sell, to hold. And you have to remember what the CEO comes out and says for the outlook of the full year, not just for that quarter or not just for the next quarter. You want to make sure that he's giving out guidance for the full year of 2017, and maybe he'll give out the year for 2018. Not too sure on that, but if this is a stock that you're interested in, as you see, the stock goes up. There are no dividends paid in the stock, as you see. The red phone and the blue light bulb, those are just earnings estimates. Or earnings beat. If it beat the earnings, I beat the estimates. But as you see here, you can buy the dip, and I would say the worst is over for now. So you might see this go. You might see this break past $30 and go higher to 35, and probably test that 35 level on next earnings. So when you see the stocks fall down and you see them miss estimates, that's okay. They're going to price that in, and the stock may move higher depending on the outlook. If it's a bad outlook for the company, the stock will move lower. But if there's some optimism or some positivity coming out of that bad earnings report, the stock will move higher, no doubt. But this is what we have to watch for, and we have to make sure that we're plotting our support lines, and we're plotting our resistance lines. So you see $30 was the resistance line, and completely it just traded around that until this earnings, and which caused the breakdown. So stocks will tend to flirt with new highs until they can get a clear picture that the stock will do better than expected earnings, and the stock will break out. But since this stock did not do better than expected, you see a breakdown, and now it's at $26 from $30. So this is what you will see when you, I would say, when you're expecting your company to beat earnings, depending on if people are giving it a good outlook. But for earnings come out, you might see it trade sideways. You never know with these things, but that's something that you will look out for to see where the company is trading. Should you get in on a discount, if there's a discount gonna happen? But whenever you see a stock, flirting around with new highs, they're waiting on the earnings to go ahead and blow that new high out the water. And sometimes you see stocks, this will probably be at 26 for this earnings, and then like I said, it might go to it might be at 35, waiting on some good earnings to go ahead and break the 34 and run 35 and go higher. So, that's what you see when you look at the company's earnings, or, when you're expecting earnings. A lot of investors or a lot of institutions aren't really sure where the company, where the company is going to go or how it's going to report, and which is why you see this stagnant trading, or, the up and, small tight range trading where it's up and down a little bit. But as you see, they gave a clear picture of the earnings, and depending on what the CEO said, this might bounce or it might just go back down. So take care, guys.